So Fibonacci retracement is a technical analysis approach based on the Fibonacci sequence, a series of numbers where each number is the sum of two preceding ones. For example, 0, 1, 1, 2, 3, 5, 8, and 13. And how it works is that you add 0 plus 1, which equals 1. Then you go back and say 1 plus 1 equals 2, 1 plus 2 equals 3, 3 plus 5 equals 8, and then 5 plus 8 equals 13. And that's how it works. We see it all around from patterns in flowers and in nature. And so we use this to predict retracements. Now, there's many ways you can use the Fibonacci sequence for trading, but what's most popular is the Fibonacci retracement tool. This is something that Kenya and I love to use, and we typically use the Fibonacci retracement tool to see how far back it's going to retrace before continuing that trend. We use this within a trend, whether if it's in an uptrend or downtrend, and you always want to find that perfect entry. Let's go ahead and deep dive into it. Before we do that, I need you to smash that like button, subscribe if you haven't already, and even share this video because a lot of people struggle with this when it deals with numbers, but you can use this for the good, and I'll be sure to take it easy on you and explain this in a way that you can grasp it and use this for your next trading entry. Let's go ahead and dive into it.
Yeah, I know I got problems, and I don't know where to go. I don't want to put the blame on you.
All right, guys, so before we get started, I'm going to draw it out really simple for you guys. So let's say we're in a downtrend. We're making lower highs and lower lows, and then eventually it starts to consolidate. Let's say price is moving up and down, not really giving us a good direction until eventually it breaks out. And once it breaks out, this is where we typically want to use our fib retracement tool. So let's go ahead and see what's going on here. Before you even use your fib tool, you only want to use that as confluence, meaning extra confirmation. We love to use only price action before we use indicators. So this is what I mean here. We see that we're making lower highs and lower lows on our downtrend. We want to identify our resistance zone right here before we broke out of it. So this is what we typically would do. As we are looking at this here, we see our highs right here. We see our resistance right here. And this is ideal where you want to buy at, around this zone here. Now, before you actually do that, you can throw in your fib tool to see if it's actual confirmation, because this will be the classic break and retest. When price shoots to the upside, breaks resistance, and then you're hoping for price to come back, retest it as support so that you can enter right there and buy, right? So that's ideal. Now, before we do that, we can use the fib retracement tool to confirm what we're looking at. So if you're using TradingView, if you look at the third column, 1, 2, 3 to the left, click this arrow and you'll see a list of tools here. It'll say fib retracement. Click the yellow star if you want to have it saved on your list here so that you don't have to go here and click it all the time. I can go right here at the bottom of my screen at my key, and now I have it tagged. So ideally, what you want to do is get it from the bottom of any impulse move, whether if you're an uptrend or downtrend. Here is my bottom right here. I'm going to take it right to the top of my impulse move right before it starts to pull back. Now, you don't know how far that impulse move is going to be. You have to wait to see if price pulls back just a little bit. And once it does that, then you will take it from the bottom to the top. And typically, you want to see one of these line up perfectly with your resistance. So example, what I'm showing here is that price is lining up right at the 50 level. Let's go ahead and blow this up a bit. Right here at the 50 level. And you can see it matches where my previous resistance is at. This is my classic break and retest. And now it gives us extra confirmation that price may come and reject off that level and continue to move to the upside like this. This is a popular way to use the retracement tool. Let's go ahead and look at the live chart here. So we're looking at CAD Chef here. CAD Chef has been making higher highs and higher lows lately. I know that because I'm looking at the daily time frame. All I need to do is look at the higher time frame, whether the daily or the weekly, to confirm my trend. I'm drawing my trend line like this here. And now I'm identifying my higher highs and higher lows. Here is my high right here, my low, my higher high, my higher low. I see my higher high, And where's my low? I have to look left for clues to identify that. Here's my higher low right here. Because it was my previous lower high in my downtrend, now it's my future higher low, which is the ingredients for an uptrend. So I'm possibly looking to buy right here, but I have to wait. We have to be patient as traders. Most of our technique as traders is waiting for price to come to you because it reduces risk. Now, if it never comes to this level, we just happen to miss it. I'd rather miss trades than buy early and blow my account. So I'm looking at this as my possible entry here. I'm also looking at this zone here because this was a previous higher high during my uptrend, but it's more of a minor level because I don't see anything going on or any price action here on the left, but I'm keeping that at the back of my mind. So what I like to now do is throw on my fib tool from my initial impulse move, which starts at my higher low or here on the trend line. So I'm going to grab my tool right here. I'm going to drag it from right here to the top, to the peak. And before, remember, I don't know where the peak is. I have to wait for price to pull back in order to know when price has stopped. And now I can put my peak here. And I want price to go to one of my levels here. 50 level is pretty good. 618 level is pretty decent as well. And it happens to line up right at my 618 level right here. As long as it lines up within one of these areas, I think you're pretty solid to go. So I believe price can come here before I want to take any entry. Even if it's currently at the 50 level, we can see that it's tested multiple times at the 50 level, 1, 2, and 3. I'm still not buying it. I rather buy at a deeper discount than a partial discount. So this is where I'm interested in buying right at this level for an upside here. Now, remember, I'm keeping this level at the back of my mind here because it lines up right at my 786 level. It happens to be right at my higher high. Remember, in my uptrend. Now, if it breaks this level, now we're possibly looking at a trend reversal when it breaks the 0 level, because now the 50 level, all that's saying is that the 50 level is halfway of this impulse move. If it retraces back to the 1 level, that means that it is retraced 100% back to the level. And if it breaks further down, then we can look for a possible trend reversal and look at something like this here. Now we're going to a downtrend. So guys, that's it. Pretty sweet, easy video. Use this only for confluence to confirm what you know already. And then you want to mark your levels first before you throw in your fib tool. If your levels and your fib retracement numbers line up correctly, you're golden for an entry. Let me know in the comments if you have any questions. Be sure to save this video to your YouTube playlist because I'm sure that this may often come up and you're going to need some help. And that way you can refer to this video in the future. This can be a pretty difficult topic to understand. In the meantime, guys, God bless you. I'll see you in the next video.